The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets in positive territory to kick things off right now. You got the S&Ps. You're up a solid 0.7%, trading up 27 points right now at 38.76. NASDAQ 100 in the green by about 0.4%, trading up 47 points at 11,222. We got the Dow right now up almost a full percent. You check out the acceleration on the Dow, man. From where we plunged to early yesterday, we'll call it overnight from Monday to Tuesday on the yen, as that sent markets lower. Boy, you're talking about a Dow right now that is almost 700 points higher from where we were on that low. We got higher prices coming at you. We'll see if this is a counter trend bounce in a bear market or what it is. We got the Russell up by 14 points at 1773. Crude catching a little bit of a bid. $73 on Friday, down at about 75 bucks yesterday near the lows, and we're trading at 77.82 right now. The gold contract hanging on to those gains yesterday at 18.25 right now, and you jump to notes and bonds. We got a little bit of higher price and lower yield. The 10-year right now accelerating up 13 ticks. You got the 30-year up 22 ticks right now, and you're talking about a yield. Oh, I had it up here. Let me get it back. 3.63%, the yield on the 10-year right now. We jump around to what else we have going on in this market. Let's check out currencies right now. You got the dollar index. 104.12, just kind of chopping around near the lower boundary line of where we were yesterday right now. We got the euro, jumping over to the euro US dollar. Pretty similar action. Interesting since Friday, right? You get the euro in a pretty tight range from about 106 to 106.40. We're right in the middle of that range at 106.20, we'll call it, and we jump over to the dollar yen. Talk about some fireworks, man. Yesterday, you trade down from 137 and change to 130. Just like that, we're back to 132.42. You put that thing on a daily, though, quite a drop-off from where we were, man. Interesting to see where the yen goes, where their central bank goes, and where we go as a result of where other central banks go. All right, jumping around to what else we have going on. Stocks rise, bonds calm as Japan yield panic ebbs. Markets wrap. Treasury yield steady after a 20 basis point surge this week. Yeah, not bad in terms of what we have going on. Let's see, jumping around to some of the stories. We'll start off with this one, because I think this one's an interesting one nonetheless. The NFL is nearing the rights deal with Google's YouTube TV for the Sunday Ticket game package. Now, before you get all excited that you're going to be able to watch the NFL on YouTube, that's not exactly how it's going to work. They had this deal with DirecTV since like 2000 or 1998. Maybe they say it in here, because it is going back forever, man, in terms of how long they've had that deal. So the NFL has been seeking a buyer for Sunday Ticket willing to pay between $2 billion and $3 billion. I remember when this is coming up, though, part of the deal that they need to make here, yeah, they don't, CNBC leaving out all the important details here. The deal, however, will not include a stake in NFL Media, which includes the linear cable channels NFL Network and Red Zone, which the league has been shopping alongside the Sunday Ticket results. The Sunday Ticket is something that they have to, per the contract, sell for like $200 or $300 or something like that. It's an extremely expensive package because you get to watch every single game whenever you want. So this is not quite the holy grail of live sports. The Red Zone channel, if you've watched the Red Zone channel, folks, that's a great channel. The NFL Sunday Ticket, probably for the hardcore fans out there, or maybe you got a team that you're out of market that you want to make sure you can watch. But nonetheless, you're seeing it happen, man, and it's going to continue happening. And you got YouTube, Google in there, potentially nearing a deal to control the Sunday Ticket. And the price of Google right now, folks, $89. You take a look at this daily now, I'll tell you. Let's back this up for a 3-year weekly to get the full encompass of the move. Sitting right at that 618, right? Pretty close to where the NASDAQ 100 is in terms of their pullback, up to about 152, back to $89, right at the 618 of the move. As somebody with kids in the house, folks, Google is phenomenal, okay? But what I have noticed is it may be corrosive in terms of addictive, and that shouldn't be surprising at all. But we got a 1-year-old in the house who's about to be 2 in just a little bit more than a month, man, February 2nd. And we have a 5-year-old in the house who'll be 6 in April. They both love YouTube. But what I find is that it oversensitizes kids. Now, as an investor, you got to love that, okay? As a parent, though, be careful in YouTube, man, because number one, it's the ability to click away, right? Watching little Tommy clicking away to videos, and then what happens is he gets frustrated because his brain gets used to clicking away. It's instant firing of those neurons in the brain, and that's not necessarily good for development. So it is interesting watching that happen. We've started to shy away from YouTube, and everything in moderation. You know, he'll still be able to use it. He likes the YouTube videos. Now the 5-year-old, similar action, but what he does is he ends up down YouTube rabbit holes that bring him to videos that are not beneficial for learning. You know, and that's what I've talked about before. When I've done the programs on here with Tommy, I've talked about that screen time is not all bad. It's not all created equal, folks. It's amazing to see how he's learned his alphabet. He can count to 20. He knows his alphabet completely. He knows many songs, right? All of that stuff, that's from using a lot of educational apps. That's from watching programs that teach him numbers, that teach him the alphabet, etc. But for instance, I catch the 5-year-old the other day, a couple weeks ago, watching a video on YouTube, breaking 1,000 rules in 24 hours, right? Those types of things. So it's interesting how that goes out. As an investor, it is remarkable to see both children flock to YouTube. And I talk about it in the house that YouTube is kind of like the new network television. It's available for free. It's advertising driven. Anybody can use it. And it has content that people can produce. Now, I say it's like network television in that their business plan is free service delivered to everybody, supported by ads. And that's what YouTube basically controls. Everybody else out there has a different business plan, and you see Netflix trying to get into it and Disney trying to get into it, offering ad-supported, cheaper versions. But in the long run, man, there's only one YouTube, and YouTube is a great service. We talk about it in the den. You want to learn how to do anything, folks, you can watch a YouTube video on it. And when I see the kids, the way they flock to it, the way they flock to the programs, double-edged sword. A great product, but the way it allows for addiction to that product. It's one thing watching a beautiful Disney movie like Frozen or something like that, right? They got songs in there, they got the kids. It's another thing watching a 1-year-old click around to videos and there are kids running around being crazy, and he's clicking to the next one, and every 5 seconds he wants to click, and then he gets a 5-second ad that frustrates him. Not beneficial. So we digress, but nonetheless, school will win in the long run, and that is just one facet of their business. But YouTube is a juggernaut, man. I see it in my house. Streaming is never going away, and YouTube has a special spot in that streaming that it would be very tough to cement in terms of allowing people to create content that they then serve up ad-driven. It's not a bad business plan, man. And now what are they doing? They're branching into network television for live sports, and that's the next messiah of live streaming, folks, and it's going to begin, and that's going to be a multi-billion-dollar deal. But when you hear that happen, remember, that is going to be a service, and I'll try and find the details of that. But part of the deal is probably because, you know, you're selling rights to whether it's NBC, Fox, CBS, all of those companies, right? They don't want to pay for the rights to air games, and then all of a sudden you have DirecTV getting offered by $50 to undercut them. That DirecTV deal has to be offered at some astronomical price, $200, $300, maybe even a month, something crazy. I'll find it out. So not exactly a deal breaker, but nonetheless interesting as that whole industry is changing. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We have the S&P up 26. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up 25 points. That's about 0.7% in the positive. You got all the markets in the green. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV. We have the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White. They break down the day's market action. They get some great guests on the program, folks. They walk you through hypothetical trade setups in the market. And, Kevin, we got to bounce in this market today. Good morning.
Good morning, Tommy O'Brien. Yeah, some good news out of Nike, some good news out of FedEx. I think the market likes a proposed spending bill. I don't really like it, and I don't think the markets will like it long term. I don't think Jerome Powell likes it, but I think the markets may like it. But really getting fed by cost cuts in FedEx and Nike having a good Christmas selling season and working through their inventory, Tommy.
Yeah, pretty interesting to see the spike on Nike, man. You're up, what, $13, almost a 13% pop on their numbers after the bell. We got FedEx up a little bit right now, green across the board. You have oil trading higher. We got 4 days until Christmas, man. What do you expect from the later part of this week, Kevin? And I know we'll talk to you tomorrow, I believe, but boy, it's Wednesday. We got Thursday and Friday, and then we're into the holidays. As a trader with experience, man, what do you say to the traders out there as we approach, some pretty light trading on December 21st as we come into that holiday weekend?
Well, the old trader in me says that this time of year, post December options expiration, that markets get a little thinner and less eyeballs. But, Tommy, modern-day trading says machines don't take vacations, and machines move the market, high-frequency trading. That's why you're seeing bigger moves, I think, pre-open. Like Nike up pre-open, there's probably not a lot of individual investors trading Nike pre-open. It's machines. So we'll see what happens to Nike once it opens. We'll see what happens to FedEx once the market opens. You saw the reaction a week or so ago to CPI pre-open and the overreaction that came. I think that's high-frequency trading and overall thinner liquidity this time of year. So be careful. Markets can really move during this, even on less volume with less eyeballs. So there are, in general, less eyeballs watching the market, but it's not only eyeballs trading, Tommy. You got to be watching at all times.
It's a great take, man, and that spike. I just pulled up the S&P futures on the Thinkorswim platform, and I got that spike to 4180 up there, Kevin, and I was doing some Fibonacci numbers. And I almost didn't want to even include that 4180 because it's almost so irrational in my opinion, right? You know, I'm taking some Fibonacci numbers and I'm taking it from where, and it was such a short-lived run to that 4180, and they gave it up in no time. And that run actually started even prior to the CPI number itself, which probably accelerated things even more. But that's great information. As we're sitting here 9 minutes from the open, we will find out once supply equals demand on the open, really where prices go. I wanted to jump to the VIX real quick, Kevin. A lot of talk on the VIX. We've mentioned it. We have it backing down today, as you may expect, but it is interesting. For all the market pullbacks we've gotten, Kevin, kind of chopping around between about 22, 23, maybe near 24, and finally we get a positive day, and you really see a pullback, and we're talking about almost maybe with a 19 handle if things continue. What's your take on the VIX this morning, backing down near 20?
Yeah, it's kind of interesting. You know, the stubborn lack of a move on the upside in the VIX and some of these down moves the last week or so or 2 weeks really, I think, is indicative of the put-call ratios in the in the S&P, and the fact that people who own protection, people who own puts, when the market goes down, they don't buy more puts, Tommy. They probably sell out the puts that they have. They're selling out some of their hedges and protections, and that's probably holding implied volatility down. Now, when we go up, you know, implied volatility comes down even more. So, yeah, stubborn levels of implied volatility here. Though that being said, some history here, the all-time average for the S&P 500, the VIX, is about 15.4. So we're still historically high, Tommy. But as you know, this year, the VIX has spent most of its time significantly over 20.
Yeah, 15.4. Not a number on my chart on the Thinkorswim platform when I go back a year on the VIX, man. 1634 to start up the year, and then we haven't seen anything really below 18, man, which is just wild. With that in mind, Kevin, we got 4 days till Christmas, man. We got today and 2 more days following that in the markets. What are you guys talking about on Fast Market coming up today as we come into the holidays?
Fun show planned for today, Tommy, as this is our year-end show today. So what do I mean by that? This is a show that'll run on a loop throughout the holidays. And so it'll be more of a bigger look, more of a macro look at the overall markets, kind of an evergreen show. We'll cover Apple in the first segment and overall technology. Then, like Folio, will do a presentation on all things EVs, and we'll look at Tesla. And then in the final segment today, we'll look at energy, the 3 big stories of this year, right? Tech, all things Elon Musk, and energy market.
I was going to say, it doesn't get any bigger, man. Apple, Tesla, and energy prices. I got the chart of Apple up here, man. Absolutely remarkable, the pullback. We're right back into the lows that we saw in June of 130 or so, and that's after being at 175 a couple times. And give us a general take, Kevin. There's a lot of discussion, man, as we come into, of course, the next year. We come into the Fed, of course, and what their plan is going to be. For those investors out there, you know, wondering what Mr. Kevin Hincks is thinking for the market as we come into 2023. I love when you say you got to stay short-term, man, because you can't go wrong staying short-term on the data when things are so hard to predict. But generally, Kevin, as you guys are going to go big picture today, what's your general take as we come into 2023, whether it's rates in the market as we're battling, man, at least in my generational inflation that, you know, I haven't seen in my lifetime for sure.
Yeah, exactly, Tommy. And, you know, the 2 things that we worry about right now are inflation and fourth quarter corporate earnings, right? And those ratcheting down. So what is going on right now in Washington, D.C.? $1.7 trillion in new spending. That's going to keep inflation sticky on the high side. And $100 billion in corporate tax hikes. That's going to hurt corporate earnings. So the 2 things we're worrying about most in the markets, Washington is going the wrong direction on this. If this bill passes, now there's a chance it won't pass, but there's also a chance that it will, Tommy.
And guess what? We get to find out, man. We get to find out when we come back here for the 2023. Can't believe it's that close, man. Well, Kevin, I appreciate you taking the time, man, that you do on a busy day. It's like every day's been busy, man. We appreciate the program every day. You have a great Christmas, man. Have a Merry Christmas. Have a great New Year. And we will talk to you, Kevin. We'll be watching today at 12, and then we'll talk to you in the year 2023, man.
Have a great day, Tommy. Thanks for having me on. As always good to be on with TFNN.
Always a pleasure, man. Folks, tune in every trading day. An absolutely great program. I've learned so much from the team at TD Ameritrade Network, Fast Market, Kevin, Tom. They got some great guests. Randy Frederick, I've heard on there talking. Just some absolutely great guests. Check it out today, 12 noon Eastern time as they go big picture. And yeah, let's jump over to Apple as we come into this break, man. You talk about a pullback, folks. Apple, right now, we're getting a little bit of a lift today, okay? You're up to 133. You were at a 129 handle, man. You look at this thing, big picture, and I don't know, maybe that's a test of the lows, right? Maybe it is, depending on what this market does. Not a lot of people saw Apple trading from 175 down to 130 when we were just trading 4 months ago, right? Absolutely remarkable how quickly some of these moves have been. Let's jump over to Tesla real quick as we come into the break, man. It just doesn't stop. Now, Tesla's getting a little bit of a lift today. Absolutely remarkable how many headlines Elon gets. Now, you know, they say there's no such thing as bad press. If that's true, what's the value of the press that Elon is getting when he is on the front page of many different financial media sites every single day right now? But that may not be exactly true. There's only a certain point, I think, where all media is good media. Tesla right now, 139.54. Stay tuned, folks. We're coming back for the open. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at S&P up 25 points right now at 38.74. You get the NASDAQ 100 up 37, the Dow up 299. Let's jump over 2, FedEx. See how they're trading this morning? You're up 6% on their numbers last night. We jump over to Nike. Nike holding the gains right now, up about 13%, 12.79%, up $13. We take a look at Nike a little bit longer term time frame. And yeah, you're getting a little bit of a bounce here. You made it all the way down to 618. Let's see what we're talking about. I'm going to remove that drawing. I'm going to take, it was a one-way trip, man. Absolutely remarkable from 179. And all we're doing, folks, is coming right into the 382. So be careful on some of these equities, man. We're at a lot of critical areas in terms of the market trying to figure out whether we're going to continue this trend or it's a counter trend bounce. Now, I talk about it here in Nike. That's a very longer term trend, right? Coming up to that 382 area of about $119. But I talked about it in my newsletter this week. If you just go short term, okay, and you just go back to the spike high we had, and I mentioned it to Kevin, man, that acceleration pre-market on Tuesday on the CPI, probably irrational. Even if you take that out of things, right? You had the market down almost 7%, man. You traded from a high of about 4,090 down to 3,803. What is that, 287 points to the downside of a 490-point index? The point being, now I took this number from the close of Monday, okay? And even if you don't include that acceleration we got lower on the yen news overnight, right? Let's just say you lose 38.27. Folks, a 382 brings us all the way up to 39.27. You're talking about a 100-point bounce. It's just a 382 because we just traded down about 300 points in the span of about 5 days in this index. So you were getting volatility everywhere, man. Now, the one thing I'll point out with the VIX as we continue to drop is that if you are looking to play for some volatility, it's not costing you as much as it may in more usual times, right? All this year, okay? Kevin brought it up. All this year, what did he say the VIX? The average VIX was about 15. Well, folks, there's the COVID spike of 85. You didn't make it below 20 for the year 2020. When things seemed like they were in euphoria in the middle of 2021, you made it as low as 14.25, okay? But fast forward to this year, and yeah, we are nearing the lower boundary line of where this VIX has been comfortable, man. You've gotten down to about $19 a couple times. You got down to a low of, what do we get to exactly? 18.45 was the low in April. You got down to a low of 19.12 in August. We got down to a low of 18.95 in December 2nd, and we just hit a low of about 20.43. So it'd be interesting to see where we go from here. Not too surprising, as you heard it, right? Fast market. They're wrapping up with the year-end show today. And yeah, don't be surprised if it's the lightest of light holidays, folks, because we got 2 3-day weekends coming, okay? To check out the holidays, and I'm sure many of you are aware, but if you're not, we didn't get a holiday for New Year's Day last year. We got robbed, man. When it fell on a Saturday, and so you don't get off New Year's Eve on Friday. You have New Year's Day on Saturday. You get to rest up on Sunday, January 2nd, so you don't even get a holiday last year. But this year, we get it. Christmas falls on Sunday, and New Year's falls on Sunday, so we get off Monday on each instance. So the markets are closed Monday, December 26th. Markets are also closed January 2nd. You had kids getting off school in Florida, at least. They're off this week, okay? So you got kids off school. You have 2 3-day weekends coming up. You got 2 days left in the market. Have you done that Christmas shopping yet? The point being, you get it, folks. It is going to be a light market out here. Doesn't mean that we're not going to see some volatility. It could actually mean the exact opposite in terms of the volatility potential when you have fewer participants in the market. But nonetheless, right now we're holding up pretty steadily at 38.72. Let's jump back to some of those stocks in particular. FedEx gives it up slightly, but still up 5.5% right now. We jump over to Nike shares, holding on to those gains, up 13%. Let's jump over to Tesla. Whew, they gave it up on the open again, man. This thing is a one-way trip. Now, all the headlines today, I mentioned it, man. Let's just pull up the front page of Bloomberg. Look at this. Look at these. Look at it. Every single day, man, he is up here. I guess this is how you drive clicks on your website. Finally running out of gas at Twitter as he hunts for a CEO. Excuse me. Yeah, and you had one of the biggest investors out there that had been a champion. Not surprised, man, eventually. Long enough. Longtime investor decries lack of leadership. Not surprising there. And this is coming from Ross Gerber, CEO of Gerber Kawasaki Wealth Management, longtime investor, tweeted about a perceived lack of leadership at the electric vehicle maker. Time for a shakeup. Yeah, the most subtle way you could really put things. And where did he do it? He did it on Twitter. You gotta love how this thing plays out, man. Elon with a sarcastic reply. Shouldn't surprise anybody, folks. But yeah, we talked about it a little bit, the board governance. Now, he had previously tweeted on December 16th that guess what? He wants on the board because he doesn't think the board is doing their job. Okay, not surprising. He wants to run for a seat. Other investors out there have also called for governance changes. And yeah, I wouldn't be surprised, folks, because he's selling a lot of shares. He's not even paying attention. And if this were a private company, he can do whatever he wants. But it's not. It's a public company. And the board is supposed to make sure that they are protecting shareholder value, and they're not doing that right now with what Elon's doing. Put it out there. And listen, I think Elon's brilliant. I think he has changed the world and pushed electric vehicles further than they would have been without his influence in starting an electric vehicle car maker. Everybody doubted him, and he did it, okay? So you can think two things. You can think that he's not doing right by Tesla right now while saying, yes, he's a brilliant person, and maybe he moved on. I mean, I started talking about like 6 months, a year ago, saying, hey, don't be surprised if he moves on to his next venture because he is a visionary. Okay, that one I think you got to agree with. He's a visionary, whether you agree with that vision or not. He is a visionary, and Tesla needs operational control right now. They don't need a visionary. The visionary got there. They are cemented. They're around. They're not going anywhere. They're going to survive. They're going to be player in the market for some time. Now, they're going to face some stiff competition from the big automakers out there that are all coming online with electric vehicles. You get the Ford F-150 electric truck coming on, right? You got Volkswagen. You got Audi. You got luxury vehicles, putting out some good electric vehicles out there. But he's not going to get fascinated with the operational running of a company like that, probably like he's not fascinated with the operational running as CEO of Twitter, folks. He's going to handle the engineering when he probably steps down. He's going to find somebody else that can do it. But don't think he's going to be the savior again, because this is a different deal. They have made it. They've made it, and they made it because he's a visionary, and now they need somebody who can really run the nuts and bolts of that company, probably like Twitter does. Different story, of course. Twitter being a private company, he can do whatever they want. I say Twitter's the greatest reality show going on right now. He can do whatever he wants with it. A lot of people get upset, right? He can't do this, he can't do that. You have to readjust how you perceive a private company, folks, because it is a private company, period. He can buy that company for $44 billion, fire everybody, light a fire in the yard, and dance around it if he wants to. I don't think that'd be a very wise way to spend $44 billion, but nonetheless, he could because he owes it to nobody else because it's a private company. When you're a public company and you have shareholders, you go to those shareholders for investments, and then you are regulated as part of being a public company. That's the deal that you come with. And this is a public company, and if I own Tesla shares, I would be livid at what is going on in this company right now. Now, as we come into this break, going back to a daily, all right, that's where Twitter started, 383. You traded down to about 205, so it's about a $175 leg down, okay? And then what did you just do, folks? You almost completed the A to B, C to D. That's one area. We'll finish up this conversation when we come back. Tesla, up 0.8%. Markets in the green. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps holding up pretty well right now. You get the S&Ps up 25 points. All the markets pretty much where we lifted off. Now, to finish the conversation on Tesla, I've given you the bear case, but the bear case may be why it's trading at 136 right now, okay? What I will say, this is basically just completed an A to B, C to D. We'll put it on a weekly maybe for a little bit more clarity in terms of this acceleration, right? That weekly beginning, when did it begin, folks? When he announced that he was going to buy Twitter for $44 billion. You can't make this stuff up, man. Sometimes hindsight is too easy. But nonetheless, from 382, the first leg down brings you down to about 205, okay? So you're talking about $175. You take 175 bucks off of the price level of about 315, and where are you, folks? 140. Yeah, 140. So this leg that you got from April down to the first acceleration, right? You chop around between 275 and 300 for a couple months. Second leg down, A to B, C to D, folks. Okay, and we're right there. So this market has problems. Tesla's going to have problems, that's for sure. But if you're looking for a buy, okay, you're back to an area that we consolidated in 2020. Now, longer term, I'd be real careful, man. For a trade, I might like that, but longer term, there's nothing stopping this thing from going back down to 60 bucks or something like that. Maybe you're coming back to the area of 64.60. I think that's what my dad pegged, that high volume spike from February. So you don't want to be buying this thing longer term at 138 if you might be on your way back to 60 bucks in no time, folks. That's the trouble. Maybe if you are really dying to get into this thing longer term, I would scale in. Yeah, I'd buy some now, buy some in 3 months, buy some in 6 months. That way you're hedged. If it starts going up, great, you make money. If it starts going down, you price yourself down. If you're going to spend 10 grand to get into that equity, do 3 grand now, 3 grand in 3 months, and then 4 grand to cap things off or whatever it is. A to B, C to D, and what's interesting too, is that it was almost a 175-point leg down on the first one as well. You made it to a high of about 415, and that acceleration brought you to 233. Pretty close to 175 points is how this thing trades on the downside. We've had 3 of those moves, and we're trading at 138.88 right now. Let's jump around some of the FANG stocks. Apple. Oh, apologies. We have our man. It's Wednesday. Of course we do. Let's jump over to our man, Teddy Kegstad. Teddy, let's get right into it, man. Good morning.
Good morning, Tommy. You got into a little groove there.
I did, man. Apologies. I didn't see the note. I was rocking. I was rolling. But, yeah, boy, we got to talk to you this week, man. Folks, Teddy writes an outstanding newsletter, the Tiger Forex Report. Let's jump into the yen if we can first, Teddy, to kick things off. What'd you think of yesterday's action, man?
Well, I think it's amazing the Japanese finally pulled the trigger. They haven't done that, and let's see, who knows how long. We've been wondering. We thought that they were going to maybe do something months ago, and they never did. Now, they do have a new chairman for the Bank of Japan coming in a few months. So the question is this a one-move deal, or are they going to do some more? Now, I think you should really pay attention to the low yesterday. We had a nice sell-off, very nice break, obviously, on the news. It doesn't surprise anyone that the yen, did that yesterday because of that move. Now, the reality is the low of yesterday did not take out the low of August. Now, on a fundamental analysis, you have to think about this. Was it support that held and didn't make a new low, or is it because it was way oversold and it was really a news-driven break? And I think it's really the latter than the former, because you have to think about this. Where were our interest rates back in August? Since then, we've had 3 Fed rate hikes. So all that happened yesterday was it kind of neutralized what the Fed did last week. Okay, so that tells me that unless the Bank of Japan is going to do this a little bit more to defend their currency or for whatever reason, I would say that I would key off of the low from yesterday. And I think that's a pretty good support basis, because just on a fundamental basis, there's no reason for the U.S. dollar yen not to trade higher right now, because that move doesn't really impact things. And we already know that we got it right and the general media got it wrong as far as the Fed stance. We know the Fed's going to raise again in the next meeting. We know that they're going to continue to fight inflation. Now, are they going to be as aggressive? Of course not. But we're already planning on that to begin with. And I think the overall market is too. It's not an extra news flash. It really isn't, But that also means that if the Japanese do continue to do things, they're going to do it at our pace. So that doesn't really support the yen versus the dollar very much long term. All it does is kind of keep it from getting as hit as it is. So what might happen now is we start to develop a range trade between 130 and 150 with the U.S. dollar yen. So I think that's something that your yen traders, and I know you got a lot of gold traders that watch the yen, should take that into account. So unless there's an aggressive change in the Bank of Japan, which that probably will not happen, until probably the end of the first quarter of next year or going into the second quarter of next year. Okay, so because they have a big turnover, and remember, the Japanese don't usually do things very quickly. They plan things out. They're fairly transparent, not so much about when they're going to do something. Obviously, that was proven over the past few months. But we do know that they are paying attention. It's not like they're asleep at the wheel. So the question is now, are they going to get a little more aggressive? We don't know yet. We have to find out what happens in the next couple of months with that one.
Yeah, I was watching the markets, what was it, Monday night, and I saw the market move. I was in the den and said, what's going on there, man? And just the timing of things, 10 o'clock at night, I think I was saying, what's going on in Asia right now, man? And sure enough, there was something going on. Can we bring it to the dollar, Teddy, on that?
Absolutely.
Because we obviously saw some movement, but nothing like what we saw in the den. What's your take on the dollar right now, sitting just at about 104?
Okay, well, yeah, exactly. Well, you know what? We had, obviously, the dollar has been under pressure the last couple of days. But today it's a really mixed bag of goods. You have the pound and the euro that are slightly lower, and the others are a little higher or lower versus the dollar. So I think you have to key off the low from a few sessions back. From the Tiger report, we announced that low was our target area that we were looking for, and it was a big Fibonacci area. There's a lot of support, but just on a harmonic value, that low was very solid. And I think that as long as that holds, especially with the interest rate market starting to sell off again, like today the interest rates are slightly higher, I think that's a profit-taking rally. I do believe that interest rates are going to continue to trade lower because we're not nearly at where the market factors in where the interest rate levels really are, especially with what we know that there are more hikes to come. So we are more likely to head more towards new lows in the interest rate markets than we are highs. And that, I think, is going to impact the dollar as well. So I think it's stabilizing because the media is so bearish the dollar right now, you almost have to be a buyer short term.
And when you're talking about lower, are you talking about lower price and higher yield on the...
Correct.
Nice.
For the interest rate markets for the 30-year and the 10-year, correct.
What do you think of the general conversation right now going on with, what the market is implying with what the Fed may do versus what the Fed is saying they may do? It's interesting. I was just having a conversation with somebody really not in the market yesterday, and they were just talking about fixed income in general. And they're thinking about putting some money in fixed income, retirement, not a bad time. Maybe you put it in a ladder if you're just really trying to be conservative, and this person was. And then the whole conversation goes, what do you think of, and geez, nobody's got the answers, man, but I'm just interested in your take in terms of going out further, right? The yield on the 10-year, the inversion going on.
Right.
It's interesting, the whole dichotomy of the difference of analysis with some brilliant minds on Wall Street that are all disagreeing to one degree or another in terms of, does the 10-year deserve to be at 3.7 right now? Are we really going to be cutting, or is it going to rise as the market comes to the realization that, you know what, the Fed is right and they're not, spitballing, and they're actually saying what they're going to do? What's your general take of that conversation, Teddy, if you don't mind?
Fed's going to keep on pressing it for a while. We're not turning yet.
Can you stay with us? Yeah. Stay with us one more break, all right? We'll be right back, folks, because this one's an important one. We'll be right back.
Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs. And join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets lifting up a bit with the S&Ps near 29 positive. So, Teddy, as I was saying there, if you could finish that thought, because a lot of people are wondering, man, where rates go next year. What's your general take on people looking for how you maybe perceive where the Fed will be as we come through next year on their rate cycle?
Summing up very easy. The trend is your friend. We've been I have at least, and we can know from our shows and our talks over the past couple of months that the pullback in the U.S. dollar and the pullback in yields should be viewed as a correction. For the mere fact that it's on a longer and mid-term basis, it still is in a trend, okay? So let's say that I'm right and we're in a correction. That means that the correction should come to an end at a fairly sometime around now or over the next couple of months or so at least, because we still have another leg lower. or meaning lower in yield or higher yield, lower bond prices, and also a higher rallying dollar index. I think if you want to be a dollar bear, and the true test is going to be when we get back up to those levels. Because let's say that all of a sudden, let's say that the media is right and the dollar's turned, the dollar's a bear. Well, then that would mean that we would be in a sell rally forecast. So we should have a rally in the dollar that falls short of the previous high, and that would be where the market falls apart and then starts to drift lower. If that's the case, that's when you get bearish to dollar. And I think that right now we have to view things as we have been in a correction, and now the real trend is coming back, at least for the next couple of months, because we know the Fed is solid on their stance. So until that happens, and we don't know, everyone says, oh, the ECB finally did this, they're going to be aggressive. Well, they don't have the bullets to do what the Fed did last year. They're not going to be doing 0.75 of a points every month or so. That's not going to happen out of them, and I don't think that even if they keep pace with us, it's just going to be keeping pace with us. So that neutralizes that trade, and you're not going to see Japan get aggressive, But now I'm not saying that things won't change come the second quarter of next year. A lot has to happen. We have to see where inflation is. You got to remember that we have a war going on that they said was only going to last 2 months because Russia was going to go broke and Putin would be deposed. Well, we're going on almost a year, and that's not the case, and it's weighing heavy on the European economy and us. So we'll see. I think that's the case right now. Trend your friend,
a lot of
baby.
variables. I appreciate the take, man. As always, Teddy, have a great Christmas, man, and we look forward to talking to you next week, okay?
Sounds good. Merry Christmas, guys. And to all the Tigers out there.
Folks, stay tuned. Basil Chapman's up next. We'll see you tomorrow.